Okay, cool. Who's interested in angel investing potentially? A split. We love it. Okay, perfect. We'll talk about both. So that's great. So I'll hand it over to Angeline, co-founder of Cherub.
Yay. Thank you so much for coming, everyone. So Jaclyn gave you a little bit of background, but TLDR on me is I'm the resident tech nerd over at Cherub. So I run our product and technology experience. That's my background. I've known Jaclyn for 17, 18 years, really, truly insane. And so we came up with the idea for Cherub in a very LA way on a hike. And so like she mentioned, part of it was I had been on the founding team of a company that came out of a very well-known tech accelerator called Y Combinator. A year and a half later, we were acquired by a company, and then a year and a half after that acquisition, that company went public. So I got to go from a team of 6 to a team of 3,000. IPO, real equity in the bank, the opportunity to help pay it forward to other founders and other women, and just things I believe in, but I did not know where to start. And so really, ultimately, that's why we created Cherub, is so that we didn't have to gatekeep on not just the founder side, but the investor side as well. Because if every person that could angel invest wrote just one $10,000 check, that would inject $190 billion worth of capital into the investment market. And like Jaclyn said, and we'll talk a bit more about the risks and the rewards of angel investing, there can be decent returns for some of these investments. And so, to be able to lower the barrier to entry and not make it just be behind closed doors because you went to Stanford or you have deal flow from just knowing certain people.
You're a white man.
Yeah, that's really why we created Cherub, which has been really exciting. And since we launched our beta experience a year ago, we've helped raise over $3.5 million to founders. And almost all of that has gone to underrepresented founders. And it's not necessarily because that's who we focus on, but I think that's who needs platforms like this more than ever. So we're really excited to dive a bit more into that. And then I want Alyssa Arnold, who's incredible, to introduce herself as well before I start grilling y'all.
Okay, let's see. Yep, mic's working. Hi, my name's Alyssa Arnold. I own a business consulting firm in Houston, Texas. Started doing really well and wanted to invest in female founders. So I've worked my portfolio up to 45 investments, which is just crazy. I sit on as advisor to some, which are here. My first angel investment's actually sitting right here. And I started getting great deal flow, similar to Jack. And so I created a female founder community, or a female investor community. And really, very similarly, I saw that a lot of people either weren't getting deal flow or they didn't understand a lot of the terms. They wanted to be involved. So we started using SPVs, which we'll talk about, but they're fractionalized entities where you can make an investment into a company with a group of investors, and then that investment then goes into the company. So we could make the minimums $2,500, $5,000. And then one of my investments was Cherub when they were raising, and I was like, I want to partner. I want to do this with them at scale and make investing, more available to more women. At Pearl, my previous company, we only did 12 deals because it was limited by me, but so many of my investors had interest outside of me. And so the marketplace of Cherub was just such a great opportunity. So they acquired us, and I've been on running SPVs and now the fund product. So I'm so excited to be here, and this is just at core what we love doing, and really it's kind of a cool full circle moment. So
yay.
Thanks for having me.
Yeah, of course. And let's get into it. I know there's a lot of acronyms like SPVs, and some of you might be like, what does that mean? And so we'll get into that, and then we'll do Q&A as well later. So no dumb questions, really, truly. This is a safe space. I've made 3 angel investments. I have no clue what I'm doing. So I'm asking them questions. I can build apps. I can do all of that. But y'all are way more prolific than I am.
I learned the dumb questions after making the investments, which I would not recommend. So ask the dumb questions first.
I love it. Okay, so dumb question number 1, not dumb. Alyssa, when we talk about angel investing, what is angel investing?
We're really going.
We're going really early, but it's investing early, right? It's believing in something without major proof of concept. So angel investing can be in, businesses like restaurants and things like that. We'll talk more specifically about venture investing because that's really what the platform has kind of brought to life for now.
Yeah, and I was gonna say, I think one of the things that people get confused on is people think angel investing is a donation in a way. It's not. So the difference between angel investing and venture capital, just for some clarity, is when you're writing an angel investment check, you're not writing it and being like, good luck. You're writing it with the hopes of exiting. You're writing it with the hopes of making money. However, you're not hyper involved in the company. You're not taking a majority stake. You know, you're kind of on the periphery, and like you obviously get investor updates, but you're not like a big piece of that company. Venture is going to come in and take a big chunk of your company. They're going to want to be part of it. They're going to want say, and their expectation is that you 10x their investment at a minimum. So they're breathing down your neck, like, you need to make me my money back and I need to make my LPs happy. Whereas angel investors are like a little chiller, I would say. You know,
We're
like,
way cooler.
We're way cooler. But yeah, we're chiller, but we also are helpful. So when you're taking on angel investment capital, like, one of the things I'll say is like, you're being helpful towards the brand. So you can look at people who would be strategic to your company, like, oh my God, like Angeline, you're like, I would like to build an app one day. I would love to have Angeline on my cap table. So I could literally be like, Angeline, my developer's sucking, what do I do? So they're more advisory kind of investors as well.
Yeah, I love it. And then venture backable. Tell me more about what makes a business venture backable.
Yeah, so I think this is so important. Venture backable businesses are growing 2-3 times year over year. So they're really using all of their cash to reinvest in the business and keep that growth trajectory, because we really want to see that hockey stick, because we want to be able to exit. And to exit to a great strategic or a PE firm, you really have to be growing very quickly. You have to have product market fit, and we need to see that in the financials. So I'd say venture backable is very high growth and usually disrupting an existing dusty category or creating a new category. That would be like my definitions.
Yeah, I would also say like not every business is venture backable. Like, that's important to know. Like, if you don't see your business as growing to $100 million, a team of 100 plus people, like you want a big business, venture's probably not going to back you. And that's okay. That's kind of where angel investment comes in, right? Like, and
That's where I made my money.
Yeah, exactly. No, exactly. And so and also that doesn't mean your business is bad. You know what I mean? It's just different. So I always give the example of Rent the Runway. So how many of you know Rent the Runway or Newly or whatever? When she came up with that idea, she's not like, oh my God, I need a warehouse dry cleaning facility. I need ops. I need this. I need shipment. She wasn't like, I'm going to bootstrap this business. Like, that's a company that needs money to start and operate. So that's a venture-backed entity that will then obviously grow into a much larger company. If you don't have, when you go into a venture pitch, if you don't know why you need the money or where you're going to spend the money, and you don't need millions of dollars, they're going to be like, what are you doing here? You need to go in with a clear vision of like what you are doing with that big capital, and it has to be a really big vision and big dream.
And so as an angel investor, how do you think about, like, do you only back venture backable businesses, or what are your expectations on returns, right? Because like we've done lots of VC meetings. They're like, tell me how you're going to become a $1 billion business in 3 to 5 years. Really, that's the barrier to entry for venture. What about angels?
So it depends on kind of what that exit potential is, right? So if I think I'm going to get cash distributions, like I don't need to see venture growth because it's not
It's
a venture,
money.
it's money, right? Yeah. And so it's really about looking the total ROI. So like you can have ROI calculators, you can do it on Excel. Like I can totally send you mine if you're interested. But I really look at like when that investment's going to mature, how it's going to mature, and what my returns are going to look like, and I compare it to the stock market, you know, and what those returns look like.
Talk a little bit about the cash disbursements, how you could structure a deal like that.
You mean on like actually partnering with? Yeah. So in venture, a lot of times we'll take future promissory notes and future equity, and we won't actually take equity today. So we'll say like, hey, we agree that the valuation looks somewhere around 10 million, but you aren't far enough along for me to really get there. So we'll have to get a promissory note, and in the future, I'll convert into equity. Well, that business is not going to take cash distributions. They're going to keep using their cash to be able to keep growing. So instead, the other opportunity here is a business that I'm like, hey, you're doing great cash distributions. Like you're able to be profitable, right? You don't have this hockey stick growth, but you have a great core business, and I want to invest in you, and I want a little bit larger stake, and we're going to grow this together, and we're going to be kind of more business partners is how I would look at that. And we're going to grow cash flow, and we're going to do distributions, and then I would look at the ROI. So if I put in $100,000 and I'm only going to make $5,000 a year, that's going to take me 20 years to get back. Like I'm going to walk away, right? But if I'm going to put $100,000 in and I'm going to get $50,000 back, and there's so many different ways you can structure these deals where like your equity decreases, and there can be like loans and things like that. But those are two very inherently different types of partnerships, and so getting clear on that.
And I don't think it's about investing in only venture backable business. Like I think a good example is Create and Cultivate. Like that was a bootstrap company, and now it has venture. But like basically the first 12 plus years, it was a bootstrap business that had a really good exit. So anyone who had equity in the company, wasn't an angel investor, had partners, made a lot of money on that deal, which is awesome for them. But again, it's like, I didn't even know about angel investors when I started the company. Otherwise, I would have loved to bring them on. And then this time around, when I bought Create and Cultivate back, we did bring on strategic female angel investors because we're like, not only one, do we want cash, obvi, but two is like, we want strong, cool, powerful women who are like, I'm talking about Create and Cultivate in the rooms I'm in. So again, there is that strategic portion as well.
Yeah, can we talk a little bit more about that, Jack? Like from that perspective, how are angel investors bringing more than just a check? Because they're not going to bring as much as venture. So what's the point of taking them?
I think Cherub is a perfect example. So with Cherub, Angeline and I started it. We bootstrapped it to get it to the place where we had really good stats that we felt like we could bring to market to raise money. So when you're going out to raise money, it's really challenging, I would say, to raise on an idea. Like, I have this idea, I have this company. Even if you have like a beautiful deck with the whole idea built out, investors get skittish. They want to see a product in market.
Unless you're a dude.
Unless, I will preface this all, that if you are a white man that has worked in Silicon Valley, you get a pass. You get all the money, which we hate. So basically, they want to see some proof of concept. So we kind of learned that way. We basically went into we went out to raise the day Silicon Valley Bank collapsed. It was perfect. We were like, who wants to invest in this startup idea? Everyone was like, get out. So we were like, cool. So we bootstrapped it, and then we created momentum, right? So what we ended up doing was we started a newsletter, free, and said, hey, who wants deal flow? And basically we got 1,500 people to sign up very quickly. And we're like, I'm interested in deal flow. Like, I want to get this newsletter. Then we basically, and by we, I mean Angeline, put together a no-code platform kind of system to run people through. And essentially what we did was we said, we're going to feature 40 companies in this newsletter. We are going to get them in front of investors on this newsletter and see if people are willing to invest. Of those 40 companies, 100% got deck views from investors they otherwise wouldn't. 20% got pitch meetings, and then
50% got intros, 20% got funding.
50% got intros, 20% got funded in 3 months or less. So we proved the concept, and over $1 million was deployed through that newsletter alone to those companies. And it was really exciting because we're like, oh, great. People want to invest, they're just not getting deal flow. And so we were able to bring that to our pitch meetings, and people were like, we would like to write checks. So what we did was, instead of going the venture route, we raised exclusively from angel investors. We raised a little bit over $1.5 million from investors in less than 4 months, which was amazing. And the reason for that, and why I was so excited about it, is our angel investors are like Alyssa. They're smart, they're connected, they're interested. They also are using the platform, so they have great feedback. And they have got us in rooms, they've got us meetings, and they'll introduce us to venture investors when we're ready, in a way that I frankly feel like I should be paying them. So it's been amazing. So there's so many benefits to angel investment, I would say, over venture, especially early stage.
And they're advocates for the brand because now they own equity, right? You guys are both on the same incentives and they want to see the same growth. So I think it's a great alignment, especially early.
Yeah, I mean, even like we have lawyers on our cap table. You all know legal fees are very expensive. So if someone wants to write you a check to invest in your business and you can call them up and they won't bill you for it, it is so unbelievably valuable. Yeah, so I think so much of it is beyond a check. It's like, what value can you bring to me? And it's not just about like being a brand ambassador and like promotion. It really is like, how can you help me run my business? We are very lean. We are, doing so many different things. It's about making sure that like, if I'm bringing someone into my fold, they can just help 10x us. So I love that. And then maybe like going back to angel investing 101 here. Who can angel invest? Like, how do you get started? How much money does it take? Are there any rules to this?
Yes, there is a rule, the SEC rule. It's an accredited investor, and so accredited investors is someone who either individually makes $200,000 a year or jointly makes $300,000 a year. It's there. It's a rule from the 1940s, I think. It's an old rule, but it's there to kind of protect, to make sure that those who are doing it know that this is high risk. And we always say, like, this should not be the money that you're going to depend on for tomorrow, because it's not like the stock market. You can't just liquidate it at any point.
Invest more than you can afford to lose.
I call
it's
it
a long game.
I call it my Vegas money.
Yeah.
So I always am like, what's my Vegas money budget for right now? So yeah, that would be accredited.
I like that. I think also it's like the way I sort of think about it, or the way that venture funds work in general, is they're going to invest, let's say, in 25 companies. They're banking on one of those companies being successful. That's their model. So when you're looking at angel investing, it's not dissimilar, I would say, but obviously you're not investing millions of dollars into these companies. But I think for me, the way I view angel investing is the same way I view crypto, real estate. It's one of the pie pieces in how I'm diversifying out my revenue while also creating relationships. So I think a good way to think about it, at least for me, like early days, when I was writing my first couple checks as an angel investor, I was writing checks to people I frankly wanted to speak at Create and Cultivate. I was like, Cindy Ramirez, Chill House, check for you. Baba Rivera, Ceremonia, check for you. But I was like, I wanted to create those relationships because I was like, one, I believe in them. I believe in their vision. I love their product. But two, it's like I'm building relationships in a community that is beneficial to my company. So it is a little bit of that as well. And what's been interesting is like, when we started raising for Cherub, was like a lot of those people wrote checks. So it's like it becomes this kind of community thing. A good example is Allie Webb, the founder of Dry Bar. She's launching a new company. I write a check into her company. She wrote a check into Cherub.
Us, yeah.
It's like you all are supporting each other and being able to like work together in that way.
So can we talk about baby checks? So how do you get started? Do you need like $1 million? Are we writing $100,000 checks?
No,
here, or?
especially, if you bring value to a business, like they're going to very much be okay with a 10K check, or if they're not and they're further along. So it really depends. So one important thing is like funds and businesses have a limitation on how many LPs or how many equity partners they can bring on.
Yeah, really quick, real talk. If you've never raised before, you might have heard like this phrase of like, you want to limit the people on your cap table, blah, blah, blah. It's a real limitation. If you hit that number, if you raise from too many people, you have to report publicly to the SEC. It is extremely expensive and time consuming. So don't do that.
Yeah, so it is important to keep your cap table clean and tight, and you're gonna run, if you're in venture, you're gonna raise multiple rounds. So it's not just that first raise, it's the next one, the next one, and the next one. So that's why SPVs are nice. If you have a group of 50 women that wanna put in 10K and that's your 500K round, just throw an SPV together on
Alyssa,
sidecar.
what is an SPV?
I'm sorry. Oof. I know. I like totally a word I didn't know like 6 years ago, and now I'm like just using it like regular jargon. So it's called a special purpose vehicle, and so it's an LLC that's created only for the purpose of making an investment into the business. So all the people who put money into it own equity into that LLC, and then that LLC then gets equity into the business. And so it's just a middleman to be able to make this cap table issue kind of go away,
and
be able
you
to take
still
smaller
own
checks.
the same amount. It's like it's just a vehicle to do it, but also you can invest like $1,500 into some of them. It's not crazy capital intensive.
Yeah.
I did an investment into Blue Me, which is a sexual wellness brand. It was like amazing, and so I was able to be part of that SPV. And sometimes SPVs are led by influential people. So like last night we had Hannah Bronfman. She led a ton of SPVs. So sometimes brands will leverage someone that's influential on their cap table to help rally an SPV and get people to invest into the company that they're already invested in.
But the awesome thing too is, so I wrote a check into Ceremonia, which is one of Jaclyn's portcos as well, and Baba Rivera, and she was raising, you get to invest at the same terms that like the venture people are raising on.
Yeah.
So, she was raising, I think, $2 or $3 million for this round. It was already like they had a lead VC. And so I think we can talk a bit more about that. But when you're investing alongside more experienced angels or VC firms, you can know that they did their due diligence.
Yeah, and so due diligence,
Oh,
if you
yeah.
don't know. So basically, like, you want to check out these companies. Like, you don't just want to write checks to anyone. And we're going to go through, so essentially we're going to, like, live due diligence a few companies of, like, what you should be looking for. And you can ask for stuff as an angel investor. I think sometimes people get nervous and they don't want to, like, ask personal questions like, how
You
much
should.
revenue are you making? Are you profitable? Like, things like that.
How long's your runway?
Yeah, exactly. I know. Like, one of the things I always say you should look out for is like ask them how much money they have in the bank, which feels personal and weird. But like people who are like, I have $100 in the bank, and you're like, cool, I'm not going to invest because like they're in a desperate place for cash, which is not where you want to be when you're investing. So things like that. But to Angeline's point, due diligence. as an angel investor, at least for me, I think everyone has different philosophies.
Yeah.
I'm pretty light on the due diligence. Like, I'm investing in the founder. I believe in the product. I'm not going to be like, I need to see your formation docs like a psychopath, but Alyssa is.
I'm the psychopath. I also learned the hard way, so I'll put it that way too.
Yes, true. Okay. So that's fair. That's fair. But I think when you're investing along VCs, you know that they have picked apart this business. They have done extreme due diligence, so you feel a little like better about investing.
Yeah, I think that's one guiding principle that if you're starting out, one, see as many deals as you can, compare and contrast, and really understand, what's a good deal to you and your thesis. But two, investing alongside other people like Jack or someone that has great experience, or a VC fund that has done the diligence. They've negotiated the terms, so you know that you're getting their terms. Those are always really great signs of success. And I also think like if you're going to be a small check, don't be the first check in, because you're not going to extend their runway, but like a week, like you need somebody in there that's like taking 70% of the rounds. So like for us, we always do SPVs towards the end, because we know we can't give them the bridge capital that they might need to really be able to go do the rest of the raise. And I think, I just want to go back on SPVs and diversification. Like, it is the key to venture. Like, I have 45 investments because I've leveraged SPVs, other people's, mine, whatever it might be. But that, I think I go into the year saying I have this budget, I'm going to do 10 companies, and really, bank them against each other with that.
It sounds like a crazy number, like 25 or 45, but one thing that I did, so my former CFO and COO of Create and Cultivate, we actually started an LLC together and started co-investing in companies. So we were writing $10,000 checks, but really it was just like a $5,000 check for me, so it didn't feel as like scary to do it together. So also if you have friends, like you can kind of like form your own little baby SPV. Just like
we also run SPVs on Cherub if you don't have friends. Yeah. So you can come invest with us.
Yeah, exactly. Yeah, so
we'll be your friends.
Stuff. Yeah, not to like put us out of business.
We will be your friend.
But yeah, no, so it's a great way to do it as well, where you just feel like a little less risky. And you can go 3 ways, 4 ways, whatever it might be. And I kind of enjoy doing that as well. But yes, on Cherub, you can definitely create an SPV. And then we also have pretty low minimums too that you can get involved in, which is great.
So as I become AV lady, I'm going to pull up some deals for us to just start going for it. But as I do that, I want to ask you both, like, generally, what's a good deal to you? What are you looking for? Hold, please.
Oh gosh, you go first.
I think we're gonna be so different.
We're so different. I know.
So because I've been a founder and I know what it takes to be successful and exit, I'm just like founder first always. Like, what's your vision? Why do you want to do this? Like, give me, and like, are you in it for the long haul? I think is like a good example. Yeah. Like, I've been pitched sometimes, this is like a big no-no, where people are like, I'm like, what's your exit plan? Like, when do you want to exit? And they're like, I don't know if I want to exit. Like, I might just give this to my daughter one day. And I'm like, fantastic. I will not be investing in you. I love that for your daughter.
That. Yeah, I love that for you.
But like, you want an exit strategy. Like, that's definitely part of it. So I would say that the founder for sure. I think also like, what differentiates the product in the market? So I'm an investor in a company called Live Tinted. Has anyone heard of that? It's Deepika Muyala's brand. And Deepika's been a friend of mine for a long time. One, she's like a massive influencer, so she has an insane following and like a community built in. Two, the product didn't really exist in the market, right? Like, she was really going after, the Indian female market in beauty, which no one had really done. So I was like, amazing market. You're the right person to do it. You've built the community. It felt like an easy investment for me to make. And like, I've made some weird investments. I'm just gonna be real. Like, I've not hit the jackpot on all of them. And here's what I'll say. The weird ones are the ones where I didn't know the founder directly. Like, they weren't a friend or someone that I knew, but I was like, I feel like I gotta invest in tech. Like, I just think that I have so much beauty in my portfolio. I invest in these tech companies. Who knows what the hell they're doing? Like, I don't even know
That's
anymore.
how mine are too.
Yeah.
But those are my SPVs. Is I really leverage for the tech ones because I do want to be diversified and I want to be a generalist. But for me, it is founders. So Jack, we are a little more similar than I was expecting us to be. Because ultimately, like, they haven't really built the full business. We haven't really seen it come to fruition. So you have to believe in them, like, and the vision. And we do like to go early. I think you're similar to me, where I want to go early. I want to help. I'm a business strategist. It's what I do.
One thing I'll say is, like, for me, when I invest, I typically write smaller checks now, but I also get asked to do advisory. So often, I'm actually an advisor to a company in here, One Kind. Yes, so good, amazing brand. Check them out. But basically, you can do deals with people where you're like really want to pick their brain or leverage their name. Like, a lot of times, people will be like, "Can I put you in my deck that you're like an investor or like that you're obviously backing us?" I'm like, "Of course." So that can be part of it too. So you can kind of add in a little bit of equity on top of the financial investment that obviously vests over time, if that's something you're interested to, where you really want them to be a bigger part of the company.
We call that sweat equity.
Yes, it is called sweat equity.
Yeah, and there's a really cool form called the FAST form, and then make sure you file your 83B within 30 days of signing that form.
Girl,
I made that
okay,
mistake.
You're
gonna have
seeing
to
a difference.
ask questions.
I'm
I was like, I've never heard of
put
these.
We had to
I was
unwind
like, I
ours.
definitely
So
haven't
funny.
done that, so I'm getting
Same.
arrested.
The SEC is
Right, well,
coming.
I'm definitely sending it to you.
SEC is about to raid this.
So I want to do 2 quick deal breakdowns and leave some room for questions. So Cherub is an alcoholic brand that, Jack, I know that you invested in.
And
you
advisor.
did not know the founders, so I think this is a really
Yeah.
interesting
I mean,
kind
I do
of.
feel like I knew them.
Well-
Okay, so they were really early to Cherub. They came on board. I love alcohol, number one, big fan.
But like, what were like this? Tell me a bit more about like the diligence.
Yeah.
and
Okay, so Cherub is an aloe-based liqueur. So like a few different things to kind of think about. It's okay, we'll figure it out.
HDMI, but you can see it here.
Yeah, all good. Oh yeah, I know what it is, so I can talk about it. But okay, so aloe-based liqueur. So one thing that's like kind of interesting is one, it's like a unique liqueur in the market. Like no one's really doing aloe. I also interviewed Gray Whale Gin. Have you guys heard of that? It's like the blue bottle. It's at a lot of bars. Anyway, I interviewed the founder on a podcast, and she sold that company within, I think, 2 or 3 years, which is crazy.
Yeah.
And I was like, what differentiated you? Like, what made you, like, acquirable? And she was like, our ingredient. They had this weird seaweed they found off the coast of Santa Barbara that they distilled their gin with. And she was like, we had access to it. We were the only people who had access to it. And so when acquirers came to us, they were like, how much of this seaweed is there? And like, can you make 100x cases of this? And they were like, yeah, we have this exclusive seaweed ring that we're doing and creating this. And that is what like got them to acquisition quickly, was this like unique ingredient kind of way that they did it. So what's interesting is like, I think with Cherub, like the fact that they have an interesting ingredient profile, they're not just like a hard liquor like vodka or whatever it is, which super competitive. They're kind of outside that, so like think like a Campari-esque type thing. The two founders are the biggest hustlers I've ever met in my entire life. They are at every event. They are like serving aloe margaritas everywhere.
They're probably around with a bottle
They're
somewhere.
probably here somewhere. I don't know. They're everywhere. And they just care so much about making this business successful. And so after seeing them at a few of our Cherub events and like really putting the product out there, I was actually at the Miami edition for a Create and Cultivate event. And I opened up the menu and Cherub was on it. And I was like, oh my God, that's awesome. Like, I didn't know that they were like at hotels like this. And then I was up in Napa at like a random bar and they're like, do you want an aloe margarita? I was like, what do you make it with? And they're like, Cherub. And I was like, these guys, they're everywhere. So I was like, I'd love to write a check. They were really excited about it. And then I became advisor to them as well. So, and I found them through Cherub.
So talk to me about metrics a little bit.
Well, and I was going to
Yeah.
say, this is important for me as an investor, is that there's a really great M&A market. There's some strategic acquirers in alcohol. There's really, really straight metrics. We know it's like, 100,000 cases a year or something like that needs to be sold for them to be acquirable. So there's a really easy path to exit. So that's also something we always look for, is it's all about how I'm going to get my money out, right? Like,
Like beauty, food and bev, and liquor, like easy acquisition. It's kind of a formula at that point. You have to hit a certain number and then you will be interested in being acquired. For them, one of the things that I was really excited about was Whole Foods. Yeah. They kept talking about how they were having these great conversations with Whole Foods, and now I think they're at every Whole Foods location nationwide.
they're rolling out.
Yeah, which is amazing. So I was like, that also good metric to invest in as well, distribution.
Good to know. And how do you learn all of this if you don't know?
Girl.
You
Like,
just start picking it up. I know. I feel
Well,
you.
it's looking at the deal flow on Cherub. It's really
Yeah.
comparing, contrasting.
And create like a little spreadsheet. Like I think for me is like I started creating a spreadsheet to be like, what are good CPMs? What is like decent revenue for a Series A? Like what is profitability? What's the path to profitability? Most of these companies aren't going to be profitable. So it's like, what's the path to profitability? Like, can you get there?
Do you need to get there?
Do you need to get there? And also, who's on the team? Like, I think that is so important. Like, if you're investing in, I don't know, I always say like a skincare brand, and there's not like a dermatologist associated or some kind of credibility tied to the brand, like, that's a red flag for me. Like, you want really strong people who have experience on the team early on.
Yeah, and I always look for people in the network that have the acquisition or things like that, and so that's where a lot of the venture funds come from too.
Nice. All right. Well, we're going to switch gears here. We're going to look at a B2B SaaS platform marketplace called Packsmith. So I'm happy to chat a little bit more about
Yeah, this is more
This would be
Anne's
like the
space.
type of deal that I would bring y'all into.
Yeah,
because-
this is where I invest in a fund and not myself.
Gotcha.
because
Okay.
yeah.
So, like, I think maybe another not so secret is if you're starting out angel investing and you know people who know people or are very like good and experienced in those industries, ask them the questions. Like, I would not invest in CPG if it weren't for Jaclyn and Alyssa. I'd be like, okay, this makes a lot of sense. Thank you for that TLDR. I'm in, as opposed to like, doing it on my own, which I think is
and
the
Cherub
fun
does a
part.
great job of saying who the advisors, who's the network involved, and things like that. So just using that as a sign of success too. I think that is why I would put a check into Packsmith. As you scroll down, you'll see.
Yeah. Okay, so TLDR on Packsmith is almost like DoorDash for third-party logistics. If any of you guys run consumer brands, you understand that 3PL is a very expensive problem. I think what's really exciting to me is that, you see this like promise of better, faster, cheaper, but really it's the momentum. This is a company that's been around for maybe a year and a half, 2 years, and they're already in the multi-million-dollar revenue digits.
For SaaS.
They are SaaS. They are also in person, which makes it really hard. So Packsmiths are very much like Uber DoorDash situation where they've recruited a two-sided marketplace, so they have people packing goods and logistics in their homes and then paying them for that. So instead of DoorDashing, they're storing Shannon from Esker's like products and taking those products the last mile. I did not know very much about 3PL. I understood it was a big problem. It's a really interesting space from a technology and operations and business perspective, but I think you gave me some context that Amazon FBA is how much of your...
Yeah, Amazon FBA can be somewhere between 35 to 50%. So to get that last mile quick, that's what Packsmith's solving for. I think they can be cheaper than a traditional 3PL, but really it's being able to fractionalize your logistics and have it in Phoenix and Texas and New Hampshire, even if you're small enough that you would really only have one warehouse normally. So it's being able to get it to your customer faster. Is the real key to their magic. And you talk through why you love the team so much.
I mean, I think this is a really good deal because metrics don't lie. Like when you have done this at scale, I think 10,000 plus orders, I think they're at 20,000 now. Super interesting. $4.2 million in revenue immediately year one. 20,000 people waiting to join that marketplace and kind of fulfill both sides because marketplaces are really hard.
You have two customers.
Really, really hard to balance supply and demand. We often talk about investors and founders on Cherub. The investors are what we call the hot girl problem. You have to have enough hot girls on the marketplace in order to drive the flywheel and get people on and using the product. So, I think that's really interesting. Who's in? I mean, if you can write a check alongside Bessemer Venture Partners,
Or
M13, Trust Fund by Sophia Amoroso, they've done their due diligence. That, once they're all in, like you're getting a really good opportunity to get in early too. What would you like to say?
One other thing I look for is valuation. I typically don't invest if the valuation's higher than $10 million. Just like not super worth it, I think, in the long run. Like I try to get in when the valuation is a bit lower.
Yeah, you want to get in early. Like if you're risky and you can do it, get in super early. You're gonna like maybe have the best returns, but you're also getting the highest risks. So.
Well, especially because you have the network to help them at that stage too. So I think you can drive the most value in that early stage.
Yeah.
And team, this is a good
Yeah,
one.
I mean, I think like this is a no-brainer. I see the analog immediately. So I was at a company called Open Door. We very much did marketplaces on buying and selling real estate. You have to launch a market in person. It's very, very difficult, but guess what? There's a playbook to it. And we poached everyone from Lyft, Uber, DoorDash because it's the same playbook. And so when I see that like the co-founder and CEO launched 10 markets for Lyft and Postmates, and then the CTO was on Uber as an engineering manager, like they understand the logistics of the problem, which are by far the hardest thing to solve rather than software. Software is like kind of easy and kind of all the same because a great consumer experience is removing friction from the marketplace. It's really building the demand on both sides of the marketplace that is hard and then executing at scale excellently. So I see this to me as like, it just makes a lot of sense, and that's why this deal is super interesting to me. And this was a deal that got a lot of traction on Cherub. So I know we just kind of like blasted
Yeah.
through
Get your
things.
questions ready. We're gonna start with questions in a second, but I also just want to point out on Cherub, if you
Yes.
scroll down a little bit. So like not that far.
Oh.
A little at the top. But like basically, so the way this works, just so you guys can see, is you see your fit, their categories, and what they want. So basically, your fit are the matches that you have together and what you're looking to invest in. And
Yeah,
what
so
they
these
want.
are my investment criteria that
Yeah.
overlap with Packsmith.
And then there's also like, the categories they're in, but also what they're looking for in investors. So like scaling, sales, tech, like, and has run fundraised before. So they're looking for people like that to be on their cap table. So it's like an interesting way to kind of connect the dots and see.
Yes. So let's do it. I think we have like 5 minutes.
I know,
left
I
for
was like, I have no much time.
questions, which is
Okay, we have 5
crazy.
minutes. Great.
Yeah.
We'll do this really fast.
Yeah.
Questions?
Anyone?
Right here. If you can stand up, sorry. Thank you.
Thank you. Okay, let's say you found a company on Cherub that you're like, I want to invest in this. This looks great. How then do the conversations work between potential investor and founder to determine if there's like strategic partnership value beyond just the monetary aspect?
Yeah, so it's like a dating app. So basically, you have to say, I'm interested, and then they have to say, I'm interested.
Okay.
So you both have to be interested, double opt-in. Once you're both interested, you can then message, and at that point, it's kind of up to you. Typically, like, they'll do a pitch meeting with you on Zoom, and then you guys can kind of talk and figure it out, and from there, you guys do the deal on your own terms.
Amazing.
Does that make
Thank you.
sense?
Yeah,
Okay,
makes
cool.
total sense.
I think there was one over here. Oh, yeah, perfect.
I have a question in regards on the founder side. So I'm a first-time founder, and I'm currently in the prototype stage. If I'm pre-revenue, because I'm still finalizing the prototype, but it's proof of concept, what are the type of questions you guys would, be having in conversations with the founders, besides, like the proof of concept and how well the market is responding to this and market size? What's something like crucial for you to have to even consider a conversation?
Yeah, I was gonna say a pitch deck first and foremost. And if I don't know what you're building, but like if you perfect. Okay, awesome, love that. But so good. So yeah, exactly. Like having the actual physical product, and if possible, being able to send it to investors. So one of the things, actually, I should say that Cherub did really well is when you were like, I'm interested in this product, they sent out these beautiful kits to investors with the product, like the margarita mix, like a pineapple, I don't know, whatever. It was great. It was like a really like nice experience to be able to like test drive the product and things like that. So just something to think about.
Yeah, and I think showing pent-up demand or interest in the market opportunity. So why you think there's validation for it. So like they created the newsletter ahead of time. They didn't have the product ready, but they were able to drive demand and show some interest.
I would also say
Pre-orders,
if you can get
anything.
a patent or a patent pending on that, that's going to be the
Perfect.
first question I would ask. Is
Yeah.
like, is it defensible IP?
Everything's
like all that
copyable
kind of
right
stuff.
now.
Yeah.
Yeah.
Super helpful. Thank you.
Hi, I'm Jillian from Jamaica. So
Hi.
in that line, international investments. Have you guys been thinking about that?
We have them, girls. It was very
right.
exciting. Yeah. So because we don't do transaction on platform, you can connect with any investor worldwide. The company can be based wherever. A lot of our investors,
UK is a big market
Philippines,
for us.
like all over the place. So we're internationally friendly.
Okay, I'm bringing you to the Caribbean.
Okay, perfect.
Love
Let's all
it.
go.
Yes, we're
No problem.
She's got to do a site visit. She's got to make sure you're good. Yeah.
Cool.
In the back.
Hello. Hi, I'm Shay. I have a question. So what percentage of the business do angel investors take on? Like, I work as like an engineer. I also own like a small Amazon business, and then I'm working on starting another business right now. So just like curious, like what percentage y'all take when
Yeah,
invest?
it's pretty small. So
Like, yeah.
Jack mentioned valuations up to 10 million, but if she's only putting 10,000 in, you can kind of do the math.
Okay, but
and
like,
it's-
I guess, because I know you guys like invest money in, but like what percentage of the business do you take on?
It's based
like,
on the valuation.
yeah.
Okay.
So it'd be the amount that you invest over the valuation. So 10,000 divided by 10 million. I'm an engineer, so I need a calculator to do that.
Yeah, I
percentage.
guess
I'm
like,
sorry.
is it like usually like 3, 5%?
So for instance,
no.
if your valuation is $10 million and
Yeah.
I invest $5 million, I own 50% of your company.
Yeah, yeah.
Does that make sense?
Yeah,
Okay.
I just like percentages more
No,
than
yeah,
numbers.
no, totally. And there's
Yeah.
also startup calculators, like you can play with it online because
Yeah.
it gets crazier the more like you
Yeah.
grow and do that. And like
Yeah.
discounts on safes, it's like a nightmare. But that's kind of how it is. So it's kind of
Okay.
up to you. So one of the things to consider when you're like setting a valuation is like, all the founders want a high valuation, right? Like they're like, I want the big valuation, but you
Yeah.
actually don't. Like, because then when you go to raise your next round, you have to have a higher valuation and you have to have the things that get you that higher valuation dialed. So if your revenue doesn't increase, if your costs increase, like there's no reason to give you a higher valuation because you haven't increased the metrics of the product.
Okay.
So typically, if you're like a pre-revenue, pre-launch business, you're sub 5 million valuation from the get-go. So just something to consider there.
Cool.
Well, and lastly, I'll say I always tell founders somewhere between 10 to 20% each fundraising round is the most you want to give away. So I think you can kind of back into if you need to raise $100,000, you know, what that valuation should be based on kind of that metric. And as an investor, I think that's a good guiding.
Yeah, and I always say, like, you can own 100% of $1 million business or you can own 1% of $1 billion business. It's like, it's important to take on, like, I think equity and partners and cash to grow your company.
And always have other founders in the industry that you can bounce these valuations off because they're going to be able to give you feedback on what they're hearing from their investors or advisors who are investing in other deals. So I think trying to figure out where the market is because it's ever moving just like the stock market would be. So
Amazing. Thank you guys so much, and thank you all for attending. So fun thing, we have outside what is known as the Cherub Angel ATM. So if you are just getting started in investing, you want to learn more, get your deal flow, we've got over 30 brands that are raising from Cherub. So if you are an accredited investor, come see me, just set up your Cherub profile. I'm going to restock the ATM right now, Founder Life. And yeah, and you can pick a product and test drive it and learn more about these brands that are investing.
Yeah, one of the products
Is Esker. Yeah, she's fantastic. Also from Austin, so
yeah,
hometown represent.
Austin, female-founded brand. We love
yes,
to see it.
yes.
Amazing.
Doing
Thanks,
7-figure
guys.
revenue, so we love an Esker
go to
moment.
the
Yeah, I'm like, we know everything.
Thank you, guys.
Yes, thank you all so much for attending. Thanks.